Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the Fed have done a pretty good job just calming down the markets, really focusing on US policy, and then see what happens with the impact of the tariffs, which they believe will be slower growth, slightly higher little perks in inflation, but nothing to really change policy. They have sort of signaled basically half percentage point cuts in 2025, but that may change, right, as the tariffs come into play. Now, if we have a look at the charts here, the main thing is just having a look where like the dollar index has just been tracking sideways, right? Now, what we are seeing across the board, and I'll show you the global markets in a second. The US Treasury yields are lower, equities are up. We should see a slightly weaker dollar, right? So the price action here, like Euro, Sterling, and Swissy, to me, have been the best sort of setups this week. Now, but the price action has been very disjointed for a number of reasons. Bit of geopolitical stuff in Turkey. Then you've got the whole Fed situation, right? This should start to get a lot clearer, right? And if anything, you look at the dollar yen, okay, it's showing us a bit of a what's going to happen with the dollar to me, like a weaker dollar perspective. And you're starting to see, okay, euro just climb up off the floor, sterling, Aussie, Kiwi are starting to look good for moves to the top side. Now, this brings us back to what you can expect today because we've got a couple of things coming out. Now, if you have a look through now, once you after the Fed announcements and these sorts of things, you do get some good trading opportunities because you get fresh sentiment from the Fed, right? So to me, it's not like let's go and sell dollars, but the weaker dollar picture is still there, right? It's been hiding behind a few things, but it will come out. We've got Kiwi GDP numbers, the BOJ okay rate decision. Well, that was out. They just did nothing as expected. Now, what we've got is the Aussie employment numbers, right? Now, this is where it comes into play. You've got to sort of understand the connection. So the central bank signaling no change of rates. Okay. Now that can potentially change with the employment numbers. They'll be all the central banks globally will be having a close look at what the Fed has done and said. And I think they'll be towing the line because we've got a couple of key things coming out. We've got obviously the Bank of England. We've also got the Swiss National Bank. Now, the Swiss, it's 75% factored in that they will cut by 0.25%. No change expected from the Bank of England, right? Now, this is important because if you don't know that, then you might see the Swiss National Bank cut rates, okay? And here's their 73.4% factored in, 0.25%. And the Bank of England, if I just take off that writing, you'll see, 91% chance of a no change, right? So the Bank of England, it's really going to come down to what they're saying, and they will take a big lead from what Powell has done. The real risk move here is if the Swiss National Bank do not cut rates, okay, it's 26% factored in that they may not change. The market has factored in a rate cut. So if they don't cut, then the Swiss goes up, right? And that'll push the dollar down or dollar Swiss lower. So just factor that in. Obviously, we've got to hear from what the Swiss National Bank have got to say as well. They are a bit of a ticking time bomb these days. So just be aware of that. We've got a few things coming out, a few central banks to sort of, it's not like we're changing rates except for the Swiss National Bank. And then you come into the US numbers and we go from there. Now, just a quick look at the global markets, right? This is where you can sort of connect the dots. At the moment, the US Treasury yields are slightly lower. Okay, equity markets up. Now, that is a direct sort of relationship. Lower interest rates, higher investment in equities. Now, what we're waiting for is the confirmation. You would have to think that, looking at the major currency pairs here, you're going to see, well, we should see Euro, Sterling, Aussie, Kiwi go up, okay, and the dollar pairs go down. At the moment, we haven't seen that turn around, but that's what I'm predicting, right? That's just because of the relationship between interest rates and the equities makes sense. Like with lower interest US interest rates, the dollar has got to go down. So let's just wait and see how that plays out. If anything, you're looking for opportunities here to get into the various instruments, currencies. with a weaker dollar outlook, right? And there's no need to sort of rush in at these current levels. Let the market sort of work itself out. So what I would be suggesting you do is just come back and like this support trend line is pretty fickle, right? It's just going from the recent level to the current low, right? That's a support level on euro, but really it's been just drifting sideways in a almost 100-point range. We now have a chance to get some clarity here. All we need, like you take this geopolitical situation out of Turkey, you know, they were calling it a coup yesterday. That's where it was sort of going a little bit pear-shaped. I think that's a bit of a stretch, but we take out any negative euro sentiment, right? And then the push from the German government to increase spending on the economy and also the military, etc. It's economic growth, right? So we should see euro go higher, but it's just being a little bit suppressed with that geopolitical event. I think what you can do is just update your trend lines, wait for the sentiment to really kick in. All it will take is one sort of key data release to get momentum going one way, and the market is ready for the action. The Fed have given us the signal, and once again, if I just shrink this up, you can sort of see here we've got some clarity, like with sterling. You've got the levels here, and we are starting to see it sort of little pop. To me, it's good enough to like sterling looks like a little bit better, right? They're not part of the euro, or they're in Europe, but they're not part of the eurozone, right? So that's probably why sterling has gone up a little bit more than euro. And at the moment, it's probably just holding the Swissy back a bit. But I do like the look of like this orange trend line at the bottom. It's more just to give us a signal of almost like where the last low was, because it's, once again, you're looking for clarity. I wouldn't be jumping into the Swiss just yet. We've got the Swiss National Bank later today, so that's going to be a little bit tricky. You want to get some clarity around the Swiss National Bank, right? They can do some stupid things. So let's just see how that plays out. The rest of the pairs, well, it just takes a little bit of time for the sentiment from the Fed to come into play. If anything, we've got some levels here on Aussie and Kiwi to focus on, but we just need the data. And that's where today's Aussie data could come into play, as well as the GDP numbers out of New Zealand. Like let's get some data, right? Hopefully it's a little bit on the good side, because that'll offset not offset, that'll go against the weaker US dollar sentiment that's in the market. And that gives us easier trading opportunities. All right. Now, before I finish, the yen, right? That does look like they've woken the beast up. It looks sort of set for lower levels. What I would be doing is just check your daily charts, just check the trends. Let's have a look what's going on here. To me, dollar yen is in play. But once again, if you have a look at the daily chart, right, it tells it is trending lower, but it's not like, because you look at the hourly chart, it looks quite epic. So let's just wait for some levels. Let's look to get in when momentum shifts, and that's the best time to be trading. All right, guys, that's it for me. Bit of a long-winded one, but markets, I think the Fed have done a great job, and we're back on looking for opportunities straight away. All right, Bank of England, Swiss National Bank, just keep an eye on the Swiss National Bank, right? They are as loose as a goose. All right, guys, have a good one. Cheerio.